This is Daniel with Unrivaled Investing, and today I am very excited to talk to you about Tencent. Just a few weeks ago, you see in the Wall Street Journal, China's Tencent becomes an investment powerhouse using deals to expand its empire. Investments worth nearly $300 billion in companies around the world. This is a Chinese behemoth building an empire, and even if you're not familiar with it, they might be familiar with you just based on the broad investment portfolio that they have. I mean, and look at this behemoth, and we'll talk about their investment portfolio in a second, but this behemoth growing their revenue from 152 billion renminbi to 482 billion just from 2016 to 2020. Their income for 2020 was 280 billion renminbi. I mean, to put that in dollars, that's $43 billion. Now, that does reflect some sizable gains in their investment portfolio, but $43 billion, which grew over 130% year over year. These are some massive numbers. A Chinese behemoth building a global empire. And to understand $43 billion, I recently did a video on Berkshire Hathaway talking about how it was a relatively safe stock in my opinion, and $43 billion in earnings power in 2020. That represents greater earnings than what Berkshire Hathaway generated in 2020. That includes their investment portfolio, faster growth, and arguably a more forward-thinking investment portfolio with Tencent. And so, when you think about this investment portfolio, this is literally just a handful of the names that they have invested in. They own huge stakes in literally hundreds of companies, forward-thinking companies around the world. Material stakes in companies like Tesla, Spotify, Afterpay, Riot Games, Snap, UiPATH, Universal Music Group. I mean, it is just incredible, the vast reach of this Chinese investment empire. And so to understand, well, where did Tencent come from? It starts with WeChat, and that's what it's known internationally. In China, it's Weixin, and this is a lot more than just a communication app. And it admittedly, it's a huge communication app used by, the vast majority of Chinese nationals, 1.2 billion daily users that you're looking at here. But it's not just about communications. You're looking at a personal gateway. This is sort of like the combination of like Facebook and Instagram, having these, and Snapchat, and having like private moments with a private side combined with like a public side of seeing top stories, live streams, searching for people, making videos, chatting with people. 120 million users post in moments every day, and 360 million people read official articles in this gateway that you're thinking about, this Weixin video count gateway. And this is not just a gateway to communication, it's a gateway into broader China with all these mini programs that sort of embed themselves within the app, within Weixin, and within, effectively what they have to offer. And so, and this is, keep in mind, these mini programs, this covers the broader economy, whether or not it's grocery delivery, ride hailing, you want to get a cup of coffee from Starbucks, you want some fried chicken, you want McDonald's, you need to do some e-commerce shopping. So this covers a very wide range, and it's built in here with 400 million users accessing these mini programs embedded within the app every day. Just think about how powerful that is. If you want to go watch some videos, you can do that within this app. And not only do you have these sort of embedded programs within this super app, you also have the wallet. With over 900 million users, you have WeChat Pay, which enables you to pay not only online, but also, using QR codes, you can pay in person. So this is crossing the divide, from e-commerce to also physical commerce as well, using the WeChat wallet. And so what about their business model? How should you think about, how their business operates? And so as you think about it, oh my gosh, there's so many different pieces to this. You have online games. They're the number one by users in China, number one globally by revenue. They talk about number one for communication and social with, 1.2 billion users, number one for monthly and daily active users for mobile payments, number two in the cloud behind Alibaba. They number one in long form video, number one in news, number one in music, number one in literature. Man, I'm getting tired of saying number one over here, but it sure seems like they are number one in a lot of things. Number one, mobile browser, security. But when you look at all these things, it's easy to sort of get distracted of like, oh my gosh, this is so much. How am I supposed to process this? You want to understand what actually moves the needle as you look at all these gears. And so you need to actually break it down a little bit, and hopefully that's where part of this video's value proposition is for you, is to think about, well, what's actually the gross profit that individual segments are generating. So 65%, about 65% of their gross profits come from value-added services, which in itself is also just a big segment that is sort of an umbrella for a lot of things. A large chunk, I'd guess the largest chunk, is games regarding in-game purchases or premium content. Like Honor of Kings is a really big one, but you also get some premium, content like Call of Duty Mobile and other games. Also, in this value-added services umbrella that represents 65% plus of their gross profit, you have Tencent Video, which has something like 1 billion users and 100 million plus paid subscriptions. So this is a crazy company that's like the Facebook, Netflix, and here Tencent Music as well, with 900 million users, 60 million paid subscriptions. And so this is a really interesting point, because if you want to bet on China's effectively growing wealth and users that want to enjoy their lifestyle, either watching movies or listening to music, this is one of the ways to do it. And in the same way that Spotify and Netflix have sort of captured that interest in the US and broadly and around the world as well. And then also within this value-added service umbrella, they also have live streaming, effectively where people do virtual gifts for each other with Huya, where they recently consolidated this asset. So those three components, I'd say, represent the vast majority of the 65% of their gross profit that you think about with Tencent's value-added services. And then another 20% comes from online advertising, which is really split between marketing that you can do. This is very similar to what you'd think about with Facebook, with as you're scrolling through your moments or your chat feed, your news feed, there are advertisements. So there's social, but there's also effectively advertisements from these mini programs, as all these companies want to pay to have access and say, hey, look, we recognize you're getting in front of 400 million daily users. This is really valuable. This sets people's behavior. Let's get in front of them. Let's pay to have that premium real estate. And let me actually, that's where I get the name of this video, where I'm talking about Tencent being a kingmaker. And the reason why is because Tencent sees all this data, and where they see, okay, consumer interest is here. People are, let's say they're willing to spend advertising dollars here to get you to this app. But you know what? This is the best return on investment. This is where most people are really interested. They can see and they can help funnel, shape these apps, shape these companies, shape an e-commerce platform, shape a ride-hailing company by saying, look, you're getting premium real estate on our app, and we, by seeing which app people are interested in, we can also figure out who we should invest in. And so then you invest in them, and then maybe you start changing the odds a little bit about, oh, okay, well, maybe we're going to charge you less for getting that premium real estate, because we want to make our investment worth a lot. And so this is part of the reason why they've built and have this incredible track record building a nearly $300 billion investment portfolio across public and private companies. It's because of this sort of unrivaled value proposition that they have, which is, hey, we have this funnel of all these users, what they're doing on a daily basis. We see their intent as well. We think we should make an investment in this type of company, and or music, video, what have you, food, food delivery. And they're saying, oh, because of this, we have this insight to say this could be worth a lot. We see the interest is there. That is just, it's like rolling with a loaded dice. You have an edge that other investors out there do not have. That is an unrivaled value proposition. That is an unrivaled advantage. And that's the name of this channel, Unrivaled Investing. I'm looking for exceptional companies and unrivaled investments. And when you're unrivaled, it means you have the right to win longer term. Everyone, as Peter Thiel once said, effectively said, competition's for losers. When you're unrivaled, it gives you the right to take market share, gobble things up, and do things that just turn you into a behemoth. And I'd argue this is a huge advantage relative to what you see with a company like Berkshire Hathaway, where they've said, literally since 1999, yeah, we've had a lot of cash on our balance sheet. Yeah, what are we going to do with it? Here it is. They see what they should be doing with it, because not only do they get the insights from looking at what China consumers want, then they go, oh, okay, there's a market for this. Let's make sure we invest in the global players like Spotify, Tesla, what have you, and say, hey, this is the investments we should make, because this is a long tailwind that we could be banking on, and we understand what those unit economics look like. So this is just a huge edge, and it's amazing the investment portfolio they've been able to build in such short order. Less than a couple of decades they've been able to build this out. Really incredible. Thinking about it. Let's keep going in terms of understanding Tencent's business model, and we'll get into the valuation in just a little bit. And so also the last key component is sort of fintech, business, and other, which is the last, about 15% of gross profits, which includes their WeChat Pay, where there's over 1 billion transactions per day with a merchant processing fee of under 1%. This I would think about is a substitute for credit cards. It's quite different, the penetration and benefits that you get with having a digital wallet like what you have with WeChat Pay versus sort of, I'd say, a much older, maybe even outdated system that you see in the US, where you're, little plastic cards that you're swiping and trying to get your best points or cash back. Here it is, digital wallet, and you can get instant coupons. You can see the cash back then and there. So there's a lot more value, in my opinion, with a digital wallet, and that's the direction the world is heading to. And also within this segment is their Tencent Cloud, which is the number 2 player behind Alibaba, along with a bunch of productivity apps like communication and the equivalent of a Google Docs or a Tencent Docs, meetings, which is their Zoom equivalent. Now, what about valuation as we think about all this? And before talking about, what do I think this is ultimately worth, let's do a quick plug where, as I already mentioned, my name is Daniel. You're watching Unrivaled Investing. This channel is focused on trying to find potential multi-baggers. So if you enjoy learning about the types of companies that could potentially go up hundreds or thousands of %, make a point of hitting that subscribe button. And if you're already a subscriber, I do appreciate that thumbs up. And if you want to follow my personal journey, each month, the first week of the month, I call out my full portfolio. And so this is for the folks that want to see, hey, what am I personally investing in? What am I thinking about? What do I like? What do I don't like? And also, during the month, each month, I call out one potential multi-bagger. And so this is for the folks that are looking to build their investment portfolio over time. Let's say each month they're thinking about, hey, I want to allocate 3-5% of my portfolio each month, looking for new ideas. That's the goal with this potential multi-bagger idea, or each month looking for something that I think could be compelling. And this month I'm very excited because I'm looking at a company that trades below liquidation value that I think could be worth 2, 3, 4x over time. Really interesting situation. Also cash flowing and profitable company. And so let's go back to Tencent though, which looking at Tencent's valuation, where so Tencent trades in Hong Kong, 700 Hong Kong, but you can also buy the ADR, TCEHY. So this is the valuation summary. Of course, these valuation summaries, viewers need to understand something, which is that I build a valuation, summary or hypothetical framework where I think about what could this business look like over time. And then when I consider my own investments, I look at this framework, and then I also run it through like an additional filter of like, well, what's the risk that this business model blows up? So that's another key component to think about. And when I look at the valuation prospects and the risk reward for Tencent, I really like what I'm seeing, especially relative to the broader market out there. I think that the risk reward is quite interesting. Where recently it's around $76-$75 a share, where I convert the US ADR into Chinese renminbi, so you can see it's a 4.7 trillion renminbi company. I'm projecting 20 to 25% growth in 2021. I'm saying their margins for this business are worth, for their core operations are worth. This is not focusing on their investments. This is their core businesses that they own, is somewhere between 25 and 30% operating profit margins, and then throw on a really low tax rate because this is China, and that's the appropriate tax rate that you should be thinking about for these tech e-commerce businesses. And so you're effectively getting earnings multiple for this business of around 30 times. And for a company of this dominance, it doesn't strike me as super expensive. But then you need to factor in, what do you think? Because I'm a long-term investor. I like to look at things over a 5-year time horizon. Well, what do you think it's going to grow at in the ensuing 5 years? And so, you have 2021, but then let's look at the ensuing, the next 4 years. And so I put out a range of, let's say, a 12% annualized revenue growth to 20% annualized revenue growth. And then what's the end multiple in 5 years from now that it could be valued at based on these prospects? And so this is just valuing their core operations. And so assuming 15 to 25 times multiple, that gets you to around 3 trillion to 8 trillion renminbi. And so that does suggest actual meaningful upside relative to the current valuation of around 4.7 trillion renminbi. And then you need to factor in this other core part, which is their investment portfolio. Now, they say the fair value of their listed companies was around 1.2 trillion. This was from their annual report. But then they also, you do need to do some sort of analysis on what is their private company worth. I do sort of a guesstimate of that of around 325 billion renminbi here. And so overall, and I'll talk about how I think about that figure in a minute. Overall, looking at the setup and the fact that they're a cash cow, they're generating a ton of cash, and they're going to reinvest that cash into companies that they think have great growth prospects, where once again, they have an informational advantage from investing that you and I or other venture firms do not have. I mean, look, based on my prior experience working at a multi-billion-dollar hedge fund, or even my experience working in an investment bank, I can tell you, investors would kill to have that sort of informational edge. And this is a huge edge that they have arguably around the world based on the data that they're getting. And that's part of the reason why they've had these killer investment returns. But you also have to give a lot of credit to management in their forward thinking, look of what the world could be in the years ahead. And so looking at this, thinking about their cash flows, thinking about these multiples, I'm effectively saying, look, you can potentially get a low single-digit return on the low side over the next 5 years, assuming very, pretty conservative relative to where they've been. And then on the high side, you're effectively assuming over a 20% annualized return for this. And this, keep in mind, gives no credit to further appreciation of their investment portfolio and private investments. So there's a lot of potential here that I'm actually being too conservative. So I like the risk reward as I'm looking at Tencent. It really does look pretty interesting, effectively saying 100% plus upside and effectively, up a little bit on the downside. That is the type of risk reward that definitely does get me interested. And I also, for those that want to get a deeper dive in terms of that investment portfolio and broader thoughts on Tencent, I got to give a lot of credit. As I was, Googling and researching Tencent, I came across the Not Boring podcast and blog and newsletter, and the Not Boring post by Packy McCormick. He does a fantastic job. He doesn't even know that I'm going to do this, that I'm calling him out, but fantastic job. Thank you so much, Packy. I'm glad to be a subscriber of your services to learn more about what you have to post each week. And so he did 2 posts on Tencent that were really enjoyable, as well as a deep dive in terms of all of their investments, in terms of putting it all together in a list, in terms of thinking about it. And my figures that I'm using here are pretty similar to ballpark to what he's getting in his own thoughts in terms of the private valuations. And look, this is not the first Chinese stock that I've said I actually think is pretty interesting. I think this is actually really interesting right now because US stocks are really expensive across the board, and you can look at some of these Chinese companies where I think maybe it's just China fatigue or concerns, but I personally own Alibaba. I think the risk reward with Alibaba is even more compelling. It's trading at something like a mid-20s earnings multiple. They also are this empire, this e-commerce empire cash cow. So I own Alibaba, but there's a liquidation play that I'm actually even more excited about. But you can click on that Alibaba video if you want, to watch that. And I encourage you to do so if you don't have any Chinese exposure, Chinese investment exposure, and especially relative to the rest of the market. But if you are interested in following my personal investment journey, as I call out potential multi-baggers, I'm very excited about this liquidation play or company trading below liquidation value that has, you know, let's say 3x plus upside over time. So that's really got my interest, and I've pulled the trigger on that, but that is exclusively for Unrivaled Investing Journey subscribers. And so you'll have to go to Unrivaled Investing Journey to find out more about that. So if you enjoyed this video learning about Tencent, the kingmaker, this behemoth that figures out this is the next company that we want to bankroll and that we are going to show to our hundreds of millions of users and help propagate and make this into the next king of, let's say, ride hailing or grocery delivery or what have you. You know, this is an incredible company. If you enjoyed this video, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Thanks so much for watching.